Hey everybody, this is Jim at SP500chart.com. It is actually about 3:30 here on the East Coast, and I've got to leave fairly soon after 4, so I'm going to do this right now. So as we look at the chart, we may see a few little things wiggle around just a bit. That's fine. I think we've probably seen what's going to happen today. I may be wrong. If I am, I'm willing to wear that. But before we take a look, I just need to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So we're starting out here on a 10-minute chart, and I made mention yesterday that this line right here is just going at too much of an upward slant to have a real good feeling about it being able to last any time at all. Just like this line was too steep, this line was too steep, and even this line was too steep. And lo and behold, today we gapped underneath this line, but as you can see, our blue line that we pointed out and we've been looking at for the past few days, or even probably we've had this on the chart for a few weeks, at least 2 weeks, that this line still pretty much appears to be having at least some influence on the market. We got a little bit underneath it to start with early in trading today. Here it is again. You see that this is drawn over the last two tops, almost this top, and I have to remind you that this is not a super exact line. In other words, we could put it here and say that the quote correct line should go here and here, and that sure would line up with what we saw today. At least what we've seen so far. Or we could say, no, the correct line is here and here, and this is just getting a little bit over it without any good rhyme or reason. But for the sake of the fact that typically things that happen longer ago don't have as much immediate effect as things that happened recently, I'm going with this top and this top, and you can see it appears as if the S&P wants to bounce on that line. And again, that line wiggled around on me just a bit. Forgive the system for doing that. It's just inherent. So here you see, break this line, come down, and at least for today, it appears the S&P is finding some support right here. Now I want to do something, and really yesterday's video, nothing changes that much because we discussed yesterday the possibility of what happens if, and we also discussed if this line breaks, then I think we're going to come down and probably check out the low 17 teens. So these things are not holding up extremely well. We've had one line, we have this line break, then we consolidate, move up, have this line break, move up a little bit, and then this one breaks. So if you want to be a bear, you could say, are we making a little head and shoulders top here? Well, if we are, then we would have a target upon the break of this 1743 line, roughly. We would have a target of about 1726, 1727. So that's not really a huge pattern, and I tend to think if this line breaks, we'll probably take a bigger haircut than that. But I want to show you one more quick thing, and then I will let that be it. If we draw a line over our last few tops. And I'm talking about the last few tops that have taken place over the past 2 weeks or so. We get a line that looks like this. And what's interesting is if we create a parallel line and line it up with our lows back here, this is kind of where the S&P is hanging around today. So I'm not ready to say that this is our real channel quite yet. Remember, I mentioned that that with the pitch that we've had from all of these upward thrusts has just been so aggressive that it just can't really keep that up for very long at all, I don't think. And we've seen that. We go up in one of these aggressive channels for 4 or 5 days, then we break it. Then we go up for another 3 or 4 days, then we break it. And now we're still going up at an aggressive pitch. And even if that line is correct, it is still more aggressive than what we've seen on the past 2 legs up in the S&P 500. This is probably a bit more sustainable, however, than anything we've seen yet, because it's not that far off the mark from this angle of attack. So let me erase that line, and we'll take one more quick look at something, and then I'll let you guys go. And wouldn't you know it, I'm going to throw something at you that is a little ambiguous, because sometimes the chart is ambiguous. If we look at this on a 3-minute chart, you can see what appears to be a very small inverted head and shoulders right here. And if this neckline is worth anything at all to us, then, and if this does act like a head and shoulders, an inverted head and shoulders, then we should get a little move up to at least 1751, 1752 out of this. And that could be the little impetus that could potentially push the S&P up tomorrow and lend a little bit of credence to a line that right now is really just purely guesswork. This is guesswork. This is only here because it is parallel to the line that defines the last 3 tops, or does the best job, shall I say, at defining the last 3 tops over the past 2 weeks. So let's keep this on the chart, but I'm going to make it very light in color until we establish a real turn right about where we are trading at this moment at about 3:43 on Wednesday afternoon. So, guys, that's about it. If this is a little inverted head and shoulders here, then we should get a little boost out of that. And by the way, I would expect this line now to have been turned into resistance, which doesn't really matter because it's going up at such a fevered pitch. It will never get touched again, just like this one will never get touched again, and this one will never get tagged again. Likely, this one will not get tagged again either. Doesn't matter. All kinds of room to the right of this line for the S&P to rally, and even rally very impressively, should that be the direction that the markets are going to take. Now you're looking at this, you say, Jim, doesn't this look like a wedge? Well, yeah, it does kind of look like a wedge, but let's still keep this channel idea in mind, because often you will see from the bottom of a channel to the top of a channel, you will often see wedge-ish shaped patterns. And then they come down, you find support, and then you move up again, and you may move up in yet another wedge-ish looking pattern. So guys, there's your video for October 23rd, 2013. Oh, one more quick thing. If you're a bear, this is if you're a bull. If you're a bear, you're seeing this. You're seeing a bear flag. So that's what I was saying, that this is open to interpretation. I almost overlooked getting that out to you. So I would say tomorrow, whichever one of these little tiny patterns plays out, that's going to be the direction of the market probably for the next couple of days. So if we take this line out and get up over 1750 or so, then we're probably going to rally on up for a day or two more. If, on the other hand, we take this out to the downside, then we're likely headed down to the 1720s. So, hey, flip a coin, take your pick. Hate to say it, sometimes that sounded like it should have rhymed. Hate to say it, sometimes I can't think of anything that rhymes. Finally, just one more quick thing. You can see where there was congestion over here on the 21st and the 20th and the 21st. Well, check that, the 18th and the 21st. Funny how we get back to that level and we start to get a little hung up again. So guys, that's your video for today for the 23rd. Again, I would say if we break this blue line, that would certainly validate this bear flag interpretation, and we would get down into the low 1730s or even the 1720s. But if we take out this top line right here, then I'm thinking we will likely in the next couple of days surpass the highs that we set on the 22nd. So there you go. Thanks for watching. Take care, and let's see what happens tomorrow.